V Ramesh, the CMD of the company, joins in now. Thank you for joining in. First, if you could start out by giving us details on your green bond issuance.
The REC has raised $450 million green bond with 10-year tenor at a very competitive rate in the international market. This is the first time that any Indian corporate has raised 10-year tenor bond in the green bond market. We have had overwhelming response. It was oversubscribed 6 times from high quality investors, highly diversified from across the world. We have had overwhelming response from Asian, North American and especially European investors. These bonds are certified by the appropriate authorities as green bonds. They will be used solely for the purpose of financing renewable energy.
Okay, let's also talk a little bit about the business itself and what trends you're seeing as the year has started off. We're almost at the end of the first quarter. Now your gross NPAs, sir, were just about 2.4% at the end of the fourth quarter. What is the trend now, and with some reforms taking place on the pricing front, is that going to get better?
Let me also clarify this, because among all the peers and all the financial institutions, which includes NBFCs and the banks which are operating in the power sector, REC has the lowest NPAs. Our gross NPAs are 2.4% and the net is 1.6%. And this is, we are working with our partners, especially where in all the private sector lending, where there are several other financial companies that are part of the consortium, and we are part of the consortium, so they'll be working with the joint lending forum mechanism to see that these stressed assets are made standard. We've also have analyzed each project for its existing problems as well as potential problems. We've appointed lender engineers and also project management consultants to see that each project is carefully monitored and see that, number one, those which are which have already been declared NPAs are made standard, and those which are under stress do not or made standard, do not lapse back under any circumstance into stressed category. So we are confident that at least I'm confident this will not, these assets will not deteriorate further. So we are likely to have much lesser non-performing assets as a proportion of our total loan portfolio.
Mr. Ramesh, in that case, what's the guidance for FY18 in terms of loan growth, net interest margins, cost of funds, etc.?
Our total loan book today is about 2,04,000 crores. The loan book, total loan book is 2,04,000 crores. We are likely to grow around 20-25% as far as loan book growth is concerned. The loan book did not grow substantially during the earlier year, essentially because the prepayment from Uday to the tune of about 43,700 crores. So that has reduced the momentum of loan book growth. But we are expecting this year the loan book to grow about 20-25%. That our NIMs have been above 4.4 to 4.6, and our margins are about 3.5. We expect the NIMs and the margins to NIM to be above 4 in the medium term, that is the next 3 to 4 years, and our margins will continue to be higher because of the higher turnaround. We made a number of changes in terms of the tenor, in terms of the customizing financing, and stronger monitoring of the project implementation, and ensuring full security to all our loans.
Okay, Mr. Ramesh, thanks a lot for your time today. That's